Yes, wonderful. All right. So once again, good morning, good evening, noon, afternoon, um, maybe very early night hours for some. I don't know. I'm sorry, couldn't find. No, it's impossible to find an hour that will work for everyone. But I'm very, very happy you could make it. And I hope at the end of this little presentation I prepared for you, um, some of the principles of the Elliot waves would be much clearer for you. And the indicator that helps me a lot with these principles would make sense to you and will be helpful as well. So, as I always do, okay, I will ask you, have patience, keep your mind open, please. Some of the things you will see today might be very surprising, some might even, wow, like shocking. Um, I will explain everything, of course, how I use, why I use, okay, and that's why I need your, from your side, to keep the mind open, because you come with some knowledge, you come with some experience, in order to be able to accept new things, you have to keep it open. So we'll do it step by step. After each step, I will stop. Okay, I will need your patience. Please remember, you are many, I'm one. We are over than 200 here today, which makes me surprised. To be honest, I didn't see that interest for such event to be that high, and which makes me very, very surprised and happy on the same time, because guys, it means very simply, you are serious about trading, you are ready to take steps to improve your trading, and you are ready to work hard for that, which again, for me as a mentor, as a trader, it's a really great sign, to see such actions from you, to attend, to learn, to apply. Maybe yes, maybe not, of course, if it makes sense in your eyes. And all right, so we are ready to go. Enough words were said. Let's start. As I said, I will stop after each question, and I hope at the end you will be very satisfied, that you are here. And I can promise I will do all to make you satisfied. So this webinar is all about tops and bottoms. Basically, the idea was, every one of you, let me just show you for a second, every one of you was exposed to Nicola's course about the Elliot waves. Now, in order to make it very clear, without any confusion, he is Elliot wave trader. I am not Elliot wave trader. But I've been trying to use Elliot waves and learn Elliot waves for very, very long time. No one ever could reach me and my understanding the same level like Nicola did. We are very good friends. It's not a secret, you know that. And the reason you hear from me about Nicola and his course is not because he is my friend, but because I know that if it helped me, it could help you to become better trader. Okay, no one expects from anyone else to become full-time Elliot Waves master or a hedge fund trader or whatever it is. But if you can take some of the principles like I did and apply it to your trading with your own style, if you have one already, if not, then of course it might design you as a trader from the very beginning. Okay, and the reason you hear even me talking about that is only one, because this is, at least from my point of view, one of the top 3 courses online. And it's not secret for you that I got almost every course and every system out there to test, to try. That's how the internet works, right? And of course, not I have time for all that. Of course, most of them are just, well, I'll say it very simple, BS. You know what it means, right? And this one completely different for one reason. Language is very simple, talked and showed and explained by very popular and famous trader, maybe less online, but in real trading, on the floor trading and hedge fund trading, he is one of the top traders, and that's not known. And again, I believe this could be very, very beneficial for everyone, okay, who is of course serious about trading. So back to here, as I said, I am not Elliot wave trader, but I took some of its principles into my trading, the trading I know, and I trade cycles, which means divergences, convergences idea, and it works perfectly together. And there is one way I found how to improve it even more, and this way was allowed by creating indicator spotting statistics for tops and bottoms, which I will introduce today. Alright, so a few words about what is going to be today, actually, okay? I will show you which is my favorite Elliott wave principle, and I'll give you a small hint for that. This is the pattern that pays the most. You will see why. I will explain and show how do I use this Elliott wave with my own trading style. Again, as I say, cycles with divergences and convergences. That's my entire world of trading. Okay? And the reason I do that is simply because I've been trying almost everything, and this is the one that worked the best for me, and proves itself over and over again with all the market conditions. So, you know, on sports, especially in football, there is a saying that a winning team, right? You don't change. Like the winning 11, you don't change, right? You don't switch. And for me, that's my winning 11. So I'll show you how do I use the tops bottoms indicators that I've created to maximize the profits. A lot of examples. And at the end, we'll talk about the $1 million question. How fast will Elliott wave principle make you a better trader? Okay, so let's start. Quick about myself. Wow, that's a nice picture. I was young here. 8. No, not 8. Like, yeah, it's no, 6 years ago. Still young. Okay, so just as I said before we start, a few words about myself. I'm a full-time trader, personal Forex mentor, and I run a club called Vladimir Forex Signals, where I mentor my followers into my principles of trading. I'm a formal hedge fund trader, and I'm proud to say formal because for all the guys that leave the hedge fund trading world and make it into personal trading, everyone is happy. It's much less pressure. It's very, very big pressure in a hedge fund, but it's for different webinar probably. And today I am consultant for hedge fund houses from time to time. Of course, not always. It's impossible for me. I go for floor trading places for the banks, hedge fund guys, and show them exactly the same principles I use and the reason why. So today I'll show you one of them. Let's start. My favorite principle of the Elliott wave is the double wave pattern. Now it's a big name, right? AB equals CD. It's a double wave pattern. Really, really bombastic subject or topic, right? But I can tell you that that's all how you look on the moves. Now, double wave could be huge. Double wave could be very, very small part of this huge move you are looking on the higher time frames. So it's everything separated, of course. Now, why I like it so much? The risk reward. That's the key game here. That's risk reward is amazing for most of the trades, and I am talking about sometimes having risk reward of 1 to 10, sometimes 1 to 20. Yeah, it's rare, and of course it's very hard to hold a position for that long without cashing out on the way. But the total profits you gain there is amazing if you just stick to the principles of this pattern. It's very, very easy to be spotted even for those who are not advanced. By the way, you know what I find out lately? Everyone, even those who have some experience, tell me they are still newbie and still discovering the market. And when I speak to someone, how many years are you in the market? And it's like, oh, I'm 3, 5, 7, 10, 11. And I say, then how come you are a newbie? Newbie is something that is very, very easy to use, right? Everyone applies it to himself as long as he comes to a new subject and don't sure how to use that and how to work with it, right? Then I said, oh, I'm a newbie. Forget about this word, guys. No one is a newbie, okay? You just look on something new in order to use that, okay? Period of time that you use something or you do something doesn't make you advanced or newbie. It's like driving a car. Sometimes a driver that drives a car like 5 months or 6 months will be better than a driver for 15 years. Yeah, maybe he has some bit less experience, but he pays attention to more things. Okay, he is much safer driver, and so on. Same with trading. Okay, forget about this word, because if you keep saying I'm a newbie, I'm a newbie, I'm a newbie, you will always be there. Oh, you will always feel like a newbie, and remember that. Okay, words create reality. And I'm not doing now the mental webinar, mental trading. Okay, that's not the idea. But just remember that if you keep yourself, I'm a newbie, I'm a newbie, I'm a newbie, it will never end. Okay, that's a very bad word. It sounds good, I'm newbie, right? But in reality, it's bad word. It never will take you to the other place. And the principle of expiration equal fast profits. I'm going to explain you why this principle I love the most. I of course talk about double waves. So first of all, how it looks like, that's how it looks like. That's double wave pattern. The idea is extremely simple. You have one move down or up. Right after that you have a pull back correction, okay, on each of the directions, and another wave that will be equal, AB will be equal to CD. Exactly by the same pip? Of course not. If this is 100 pips, this one could be 90 or 110. That's okay, that's acceptable. Of course, we cannot expect it to be ideal and identical like twins, right? It's impossible. Market is not that Mr. Perfect. Okay? So that's how it looks like. The principle is very, very simple. Now, here is how it looks like on the chart. Okay? And you can find it everywhere. Everywhere you will find it. Okay? Big move, pull back, another big move. Each of the moves, if you take a look here, and that's one of the things we will be using as well, talking about today. Each of the moves was separated by 2, right? This is A, this is B, this is another C, another D. Boom, pull back, right? And then another A, B, C, D. Like A2, B2, C2, D2, right? And they are equal. Now, the big trick that comes to double waves is that, first of all, they're not always ideally identical. Like here, this is still double wave. Or like here, this is still double wave. Okay? Like here. Okay? Now check this out, how this one works. Small move, pull back, big move. Right? And correction. How this one works from here? Small move, big move, correction almost to the same level. And here. And then one big move. Now, why I show you that? Because that's the biggest trick exists on double waves. Double wave is only one secret of Elliot waves. Why is that important? You pay attention to both waves as they are developed, because if the wave one, this big one, let's call it AB, right, is developed the same way like CD, and I'll explain it in a minute what I mean. That means the big money is playing in. That means that once the equal waves come to this place, there is an expiration. And if you remember at the end of the overview for this meeting, I said I'll show you the principle of expiration, how fast it creates the profits. The option guys, the same guys that comes and work for the hedge fund, they trade options, most of them. Because of course not everyone, some trade spot market, some futures, but options is everywhere. That's the real market. Why? Because by options you create a demand for something for future. And the more money is involved for some specific level, the bigger the pressure for this very specific asset to go and to reach this area. Make sense? Okay, just imagine I now write an option that the euro dollar, for example, somewhere on 2017 or 18, okay, will go and be above 120. Oh, just an example. It's not a bet. It's not a trade. It's not a suggestion. Okay, just an example. So I'm the first to do that. On some level, another guy to do that. And the more money is involved, and the closer we come to this date, the bigger the pressure starts to be on this asset you are talking about in trading to go and to reach this area. And that's the expiration. The more pressure it comes, right there is some expiration here, because they are developed equal. Now, small secret from inside, okay? Hedge fund, they know how the first move, any move was created, and they are creating many inner short-term options to protect themselves, to create some kind of hedging as well, and they protect themselves doing exactly the same option in total, and that's why the moves look equal. And when they are equal, you should know big money is playing inside. And when it comes to this area, that's the expiration area, and you can expect some serious move out of there. Expiration means a lot of positions been closed and there is much less demand for this specific asset, which means there is going to be exactly the opposite move. And that's one of the principles I love it so much. That's one of the things I was doing as a hedge guy. And it took me time, to be honest. It took me years to translate it and to find the same way how to apply these principles on mathematical numbers into charts. Okay, after seeing enough, I could create it all together. But in the beginning, I couldn't really do that because it was really crazy and new even to me back then. Okay, so that's the idea. And same here. Okay, take a look on the next move. Okay, small V pattern, move and correction, pretty much the same level, and big move, then correction, and again small and V pattern here almost, and boom. Then when you reach this expiration, that's what you can expect right after that. Okay, so said enough. What I need from you is to learn to pay attention if the ABCD are developed the same. If you want to take it one more step forward, like more advanced, you know, you remember the school, right? Remember your mathematics teacher, right? Or college or whatever. Okay, talking about axes, right? How many of you now say, Vlad, what do you want from us? Or leave me alone. I just do it fast, okay? The very small secret, X and Y for both move should be pretty much equal. Now, it doesn't mean if this move was 25 candles, this must be 25 as well, exactly. Of course not. That's why we make it visual, okay? I don't care about counting the exact number. What I need from you is looking visually and say, are these developed the same? They took pretty much the same period, like these two. Are they developed the same principle? And really, you don't need to be advanced here just to understand if the movement was developed by the same idea, yes or no. That's all I'm asking from you. Okay, and again, I don't care about if each candle was equal. No, the entire move to move. That's all. Okay, like two parallel lines. You just make sure they're going to the same direction, same way, and everything else. All right, let's take a look a bit more and a bit more. Okay, now that's the principles of the double waves. Okay, they should develop the same, and you will pay attention that, let's say, this one was developed like this, 1, 2, 3. Okay, separated by 3, and this one was 1, 2, 3. Pretty much the same, right? Once you reach this expiration area, you will get a bounce, and this bounce could allow you to make very nice profits. In a minute you will see how. Now, what else I wanted to say here? Okay, let's move on about this. By the way, as I said, it's only one principle of Elliot waves, and from the course of Nicolas, for those of you who have it or will have it, it doesn't matter, or even if not, from everywhere you will see and hear. Okay, these double waves include them inside also the other principles. And if you remember, I said that they could be the one that will pay the most. If this was 1, 2, that was big drop for 3, 4, 5. Okay, or maybe even this was the 4 and this is the entire 5. And same here, small, big, and one more, right? That's inner principles. I'm not going to waste your time on how to count 5 waves correctly. That's leave it to the master. Nicola does it much better than myself, and that's why I say for the entire Elliot wave principles, that's where you need to trade. And now, why I say double waves I love the most, because it includes inside the other principles. If you took a look on the big ABCD movement, okay, and he will be teaching you how to trade if this is 1, 2, 3. Sorry, you see, I told him you count that he counts better. 1, 2, 3, 4, 5. Okay, then he will be teaching you how to trade 2 and 3, wave 3, how to trade the entire movement here. Okay, and how to trade these ABCD corrections, pullbacks. That's everything that he teaches, but I teach you how to enjoy from the entire movement. And once you figure out you are developing the same movements, you know you can enjoy also from wave 3, also from the big movement, and also from this. And that's the best combination. And that's why I decided to have this event today, just to show you how I do that. Okay, and for that I developed, to make it even better, tops and bottoms indicator. Okay, what is this indicator and how it helps you? It is a sortable data. It shows you data by date for tops, bottoms, or both. I'll show you in a minute. It has clean design. It's fully customized. It reads all available data on the chart. Okay, it's optimized code for slow computers, so the platform will not freeze. You know, some indicator make the computer very hard. And data available in percentage and actual top bottoms, the amount of the top bottoms. Okay, that's how it looks like visually. That's the entire data you have. Okay, now it's arranged by the day ups, which is tops, bottoms, and bows. If you click on the indicator day, it will arrange it by day, ascending or descending. Oops, apologies. If you click on the up, it will also organize it with the same idea. Okay, ascending or descending for the ups and tops, or ups. Sorry, the ups also for only for ups, and the down. If you click on down, it will arrange it by downs. Both will arrange it by the dates that are actually relevant for tops and bottoms on the same time. Now that's how it looks like by a range of tops. I click the up. That is OZN daily chart, and this is the very time to say that this indicator is only designed for a daily chart. Why? Because all the big options are designed by daily or even weekly, but that's for more like investment. Daily is the most traded chart by the option guys, because they understand the expiration period, they understand everything, how and where should be designed and created. So I click the up, and what I get 2 dates. Okay, for you I can tell I use normally few dates. For the 1st till the 5th, 6th, That's what I count. Okay, that's the most important days. Why? Because that's where most of the tops created. Now what it gives me? 16 tops were created on 14 from all the tops I have on a daily time frame, and 14 were created on the 11th. It's also 6.2 and 5.4 percentage from all the other tops we have around. Now, how does that help me? I have 14 and 11. They are pretty much close dates. Okay, sometimes there is a weekend in between, so we miss one day. Okay, so that's the date that allow me to create some kind of range. So I do that like from 11 till 14, or even from 10s to 15s. Why? Because sometimes in between there is a weekend. Okay. Now, of course, also you understand if top is created on 14, then of course it might start to be created on 13 and might end by 15. 14 is just the area where it comes. Okay, so this is why I took these two first, and that's where you can see. Okay, I arranged it by the red two parallel lines. That's the range for the 14 and for the 11. Okay, that's where I marked it right here. Now here you can see 12. Why? Because that was a weekend, and this one is 9s. Okay, so you play with the with this idea, and by doing that, okay, we have 1, 2, 3 examples. Now, how do I actually use that principle to trade? Okay, let's go to here and see how we trade it. I want my ABCD idea to be completed by these specific dates I marked for myself. Okay, will every will every 14th or 11th of each month will create a top? Of course not. You saw there are many other numbers, but what I know is if I approached and I reached the this date, I know to look for double top to be completed, and if that was completed, I know I'm going to trade it. Why? Because it gives me the statistics for very, very powerful dates, okay, or periods. And if the ABCD was completed by the way I like it to be completed, then I know I'm going to trade it, because most chances are with me, and most chances I will get huge risk reward here. Okay, so here is an example. Okay, I took two ABCD. Okay, A1, B, C. What do I miss? Oh, sorry, A, B, yeah, C, D. Each of them is created as well by, right, this is the first move, right, A, B. This is B1, A1, each of them, right? Then C1 and D1, right? A, B, C, D. And then we have also A here, B, C, D for 2, right? Each of them separately created as well the entire move. So this is 1, 1, and each created the same idea. Now, remember what I told you before? They should develop pretty much the same way. Small move, correction, big move. Right? Small move, correction, big move. They develop the same, they show the same, and if it comes, you see the dates? If it comes to the range where I want it, what I need is a divergence. And from this top to this top, I have a divergence. Why do I skip this top, by the way? Because this area is lower than this high. So that's why, of course, I cannot compare divergence when it goes this way. Divergence I can compare when it goes this way. So that's why I compare this and this. And I found a divergence. And I know that this is where expiration comes in. And most of the times, most of the chances, this will pay me, and pay me extremely well. Okay? Now, how do I love to enter? There are two ways I enter my trades here, and it's all about the risk reward at the end. Okay, now the truth is you can apply any trading system you want here, any idea you have, anything you know, and it will work well. Okay, why? Because after the expiration comes in, I don't care how you enter a trade. What I care is you read it correctly and you know to find the best risk reward. So for me, from here it's only short. And the question, how do I trade? I have two ways to work with that, which I love the most. That's false breaks. And there are two false breaks. One is the principle of horizontal false break. When there is a high, H1, and I break above it, create H2, and this H2 is higher than H1, and then I have a reversal and a candle closes below here, which is the level of H1. So break above, retrace, and close below. Ideally, of course, with the red candle, right? Because red brings in the bears. And here I must have a bearish divergence between these two tops. At the end of the move, I must have divergence. Second principle for false breaks is what I call triple spot. Okay, when you are in a move and you have spot 1, spot 2, spot 3 on a top trend line, and you break above it and you close below it right then, below the trend line, then this is also false break. So we have two false breaks types, one of them horizontal, one of them trend line. Both are amazing as long as this came on the third, or maybe it was even spot number 4. Spot number 3 or spot number 4, both acceptable. Less or more, not acceptable. Remember that. Very important small trick for that. What do we have here? Exactly like I like. 1, 2, and boom, spot 3. It created the false break, broke above, and retraced inside, creating for me what candle pattern? This is a wonderful inverted hammer. That's a really great call for a sell. And I said back then, risks will be very small. Rewards could be monsters. And again, how reward should be set, I leave it for the entire Elliot wave principles because it's important you understand what you measure. But basically, from here we can go for big ABCD down, or you can start to develop 5 waves down. Again, I leave it for the Elliot wave course because it's very important where it comes in. But you understand from here that risk rewards for such setups come at least to 1 to 3, on average 1 to 5 up to 1 to 7 on average, and more, and sometimes even more than 1 to 10. To tell you the truth, once in a while, maybe once per year or so, but I find setups for 1 to 40, and they pay. Question is who will be able to hold this position, who will close on the way. But just think about it. One setup, and it happens, okay, not every year, but sometimes once in 2 years you have 2 instead of 1 per 1 year. Sometimes you have amazing setups which pay, and they pay ultra well. Okay, let's move on, and here is another example. Okay. Now we had 2 waves here, as you can see. Again, boom, boom, boom. Okay, and take a look what this one also created by 2, and this one was created by 2. Now this is a false break, horizontal false break with a bearish divergence. Check out the dates again. Okay, it started from 11, and I'm good with 11 up to 14, even 10 for 15. Why? Because according to the numbers I saw, right? Remember from the daily chart, right? And here I got a false break, and that's where I will want to go and to enter my setup. And if the big candle, if the false break is big candle, you can always look for a pullback and then sell, improving your risk reward dramatically. Okay, and that's the idea here. Now, how do you set your profit here? It all depends from where you come, from what the trade is, and that's why I say I leave it for the entire Elliot waves, because if that's the case for the big two waves, then you know you can all the way ride all the way down to here, and just imagine the risk reward you get here. Of course, we even don't need to enjoy from the entire risk reward, but if you can get here 1 to 10 and you can profit 1 to 5, will that be bad? That would be amazing. So the principle of top statistics or bottom statistics, false breaks followed by divergence. If there is a false break without divergence, or double wave coming without divergence, just skip that. That's not what you will want to use. Now here we go once again. Take a look. Each of the first two waves, okay, each of them created like 1, 2, 3, 4, 5. This one as well. 1, 2, 3, 4, 5. This first move was completed by false break. This second move is completed by the false break. Are they same? They develop the same way exactly. And at the end of the move, between these two tops, I have a bearish divergence. Check out the dates. I'm good with the dates? Of course I'm good with the dates. And I'm good here with the false break. And I'm good with the entry. Okay? That's what it is all about. Now, I will talk about the tops and the bottoms in a bit more, a different view in a second. Now, quickly show you the bottoms. Okay? Now, I clicked the down here on the indicator, on daily chart, remember, most important. And it gives me these dates. As I said, for me, the first 6, even 7 are okay. Now, it shows me 12 and 13. Very, very strong, but I didn't use that. Why? Because I already used the 14 and 11, right? They're too close to each other. So was that? Okay. So I took the next range I can create, and that was second and the third. On second and third, I have the blue lines here. Now take a look how it all looks like. This is a third of the months. Okay? Two beautiful waves. Each of them was created by another two waves. I have spot number 1, spot number 2, spot number 3 to be fake. I have a bullish divergence and I come here. Do I have a perfect call by Mr. Market for what I wanted to see? Yes, that's the expiration I want to work with. That's where I will want to trade. That's where most of the chances the market will follow what I say. Is it 100%? Of course not. But believe it or not, it's over than 80%. The market will do what you want. And don't believe me because of my green eyes or my blue eyes on summer. I have switching colors. True story. Switching colors during the periods. So don't believe me because of my eyes. Go to the charts and you will see that by yourself. Okay? And let's see more examples. Okay, one more. I need to erase the previous lines. Two waves down. Okay, now check this out. Can we say anything equal about these two waves except that they were straight? Okay, this is a straight move. I cannot say anything about it, but I can say that each of them was like 1, 2, there was a 3, here somewhere 4 and 5. Same here, it was 1, 2, 3, 4, 5. But each of them a straight move down. Straight move down. Now, sometimes you will say something like that. You can spot like 1, 2, 3, and that's your false break. You can use that, yeah. Okay, but basically, what you can also do, this is the beginning of the week, and you have a gap, and you have a bullish kick. Okay, so you maybe even don't need to wait for any of confirmations, because this is a gap and a bullish beginning of the week. What else? At the end of double wave, on the very specific date. Okay, now pay attention. It was second and third. As I said, this was weekend, so it's skip, right? Okay, so this is 4, and that's more than okay. So my friends, It's not happened just because. It happened for a reason. The big money involved, and how do you spot it? You already know. I've been talking about it on the beginning. By equal moves, same development principle. And you have the top statistics for bottoms and tops. They will help you to spot the best entries. One more. 2 waves down, coming with a false break as a trend line, as horizontal as well. Whatever you choose to do, more than acceptable. Now check this out, how this to develop. Very powerful move and then kind of a range. Very powerful move and kind of a range. Are the move equal? Yeah. That's the same principle. You see, they do exactly the same. Yeah, I don't need you to count candle by candle for equal moves. No, the entire move. That's what you want to do. You reach the dates you want, you have it happen, you know that's where you will want to trade. End of story. End of story. It doesn't have to be more complicated. That's all the confirmations you will need. And as I said, from here I don't really care what strategies you will start to apply. Whatever you do. Whatever you will want. Yeah? You can use that. Now inside the Elliot waves, for example, why, if you know all the principles, it will be even more amazing for you. Because you will know how to start and count. And where you will want to cash out your profits. Alright? And it's very, very, very important. You will know to spot, for example, the first move, and then you know you are going for the third move, and this will be your target versus this risk. You will know to maximize your profits. But the first thing you will know is how to spot your best entries polished by statistics. Statistics is the best thing to happen in the market. Now the $1 million question, how fast will Elliot wave principle make you a better trader or a great trader? As fast as you will apply the rules, as fast as you will understand that not every trade is going to be a successful one, and as fast as you will follow the rules strictly and make your goal to become a successful trader. Because remember the story of the newbie at the beginning? As long as you will keep yourself telling yourself, I'm a newbie, I'm a newbie, I'm a newbie, I'm a newbie, you will always remain a newbie. But once you decide, I'm going to apply the rules, I'm going to work hard, I'm going to make it happen, it will happen. Okay? Now, the best thing to do is practice. Practice is the best thing you can do. But, true story, it requires time. If you don't dedicate time, don't expect results. Just by wishing, oh, I will find time, I will be good, I will be good one day, okay, maybe over weekend I will have some time, 1 hour or so. My dear friend, that's not how you become a master. That's not how you become successful. Okay, on my way up, I was going to sleep 3, 4, 5 a.m. And even today, sometimes I sit all the way to learn and to analyze my own trades, to understand what did I do wrong, what did I do good, and how I can improve from here. That's why I always keep develop myself. I always come with these ideas for statistical tops and bottoms just to make sure that my cycle principle and the Elliot wave principle, the principle of waves in general, makes sense and how to polish that. That's the small secret you will have to remember. That's what will make you successful. So as soon as you will accept it, as soon as you will make it happen, it will happen. Just to want is not enough. Okay? And I always tell that this is my motto in life. Dreams do come true, but you have to tell them to the right person. Remember that. Okay? Now, I want to show you something here, as I promised. This is the indicator, okay, back here. Now you can see this is a daily chart. Okay, we always start from a daily chart, right? This is the entire year I took here, and we had like 1, 2, 3, 4, 5, 6 calls per one pair. We have 20 pairs over. You know what? Just trade 10 pairs, the major ones. Okay, 6 spots or sometimes more. for one pair during the year, okay, and you have, let's say, 10 pairs you trade, that's 60 potential trades. That means like 5 trades per month. Each of the trades would be able to provide an amazing risk reward, which could make you come at the end of the month plus 10, plus 20, plus 30, plus 50% sometimes. Now, who said that over trading is good or trade every day is required? If you think that after 200 trades per month you will have more profits than after 5 trades, you are wrong. You are wrong, because trading more means also make more mistakes. Okay, let me ask you a question. When you drive a car, okay, where is, well, maybe that's not good, that good example. Okay, but if you drive the car 10 hours per day or only 30 minutes per day, or let's take it per month, if you drive 5,000 kilometers per month or only 500 kilometers per month, where is the most chance your car will be broken? Oh, with the 5,000, of course. Okay, you got my point, my friend? That's the idea. Same with trading. Who said over trading will give you the best result? That's wrong. That's wrong thinking from the very, very beginning. And you know why many traders give up? Let me tell you the truth. Because most spend all the time in front of the computers moving nowhere. Because they spend the time for trading instead of learning, instead of improving themselves. You know how many hours I trade per day? Maybe 2. I will lie if I said there are no days that I trade more. Of course there are. But there are days I don't trade at all. You know what I do the rest of the time? I analyze myself, each of the trade, from all the angles, just to improve myself, to polish myself. And I do think I'm on pretty good level. Well, I guess that's why I am invited to be consultant for the hedge fund houses. And that's the thing you have to remember, that there is trade for living and there is living to trade. Decide where you want to be. Are you going to spend your life to trade, or you want to trade for a living? Okay? That's very, very different things. And if you will learn to have the patience to spot the best setups and trade them, that will be more than enough, will give you much more free time to improve yourself. Robert, thank you very much, and I'm very, very glad you trade the cycles on a very short term, and it works well. They work for one reason, because it comes from the real money, from the real market. Okay, it's not like some BS with, I don't know, made up things. That's the real things. That's how the real market moves. So that's why it works, and I'm very glad to know it works for you. Okay, so back to the end of the examples. I said all I wanted to say. Guys, first of all, extremely big thank you for coming. If you have any question, please write them down. I will reply. Attila, yes, this is recorded, and of course I will share the link. Yeah, definitely. Now, just one thing, just to be fair. Okay, this indicator is yours for those who go with Nicolas to learn the entire Elliot waves. Otherwise, it will not help you. If you have already, or you plan to have, or whatever it is, to have his course, email me to here, please, vladimir.ribakov@gmail.com. This is my personal email, okay? Not support, nothing like that. Me, myself. And I will send you. Now, if I don't send you in with, it comes with the indicator and video of explanation. Okay, it comes together. If I don't reply you within 1 or 2 hours, just know I will reply as soon as I have few minutes free. I promise. Okay? So, extremely thank you for being here on Friday before weekend. And thank you, Robert. Yeah, it was once me and Nicola met, by the way, true story. We knew we were going to combine things and to create some really, really, really killer principles. And again, don't judge me by my eyes or by my voice or if I sound nice or not. No, nothing is best than practice and charts. Go to the chart and you will set it by yourself. Then come back and send me. Okay, this is the whole story. Thank you for being here. If you have any question, this is my email. I enjoyed. I hope you too, and I hope you go for a weekend satisfied with some good thoughts and some good ideas, and maybe somehow even better trader. Thank you guys. I'll see you around. Bye for now.